Welcome, everybody, to Calmness and Chaos. My name is Joe Fahmy, alongside my super awesome co-host, Mel Stone. Mel, how are you doing today?
I'm good. I'm great to join you. I'm coming off of a few days of vacation, so excited to kind of jump in and see what we have going on.
Awesome. Awesome. We did our intros last week, so let's just jump right in. I figure let's cover a market overview, and then from there, hopefully that'll carry us into some of the unusual options flow and whatever else you're seeing. So if you're cool with that, if I can take like 2 minutes to go over a quick market overview.
Love it. I need it myself. Like I said, I'm coming off of vacation, so would appreciate some insight.
Okay. So I want to do a quick sort of overhead view with a daily chart of the NASDAQ. Really quick, most of the indexes flow together or correlate together. I like the NASDAQ because it's where a lot of growth stocks come from, a larger sample size of stocks, and a larger sample size of volume. Because a lot of people ask why I use the NASDAQ. I think it's the leading index. I'm already digressing. So we had strong volume to start off the beginning of the year. To start off, meaning for people who follow IBD, William O'Neill type of strategy, it's just signs of the big institutions coming into the market. And that lasted from January into about mid-February. Now, mid-February, this is where you and I both talked on Spaces, and I even retweeted Ryan Dietrich's stat that the second half of February tends to be weak. And we did get that weakness. But this is where our interpretation and our analysis of things over the past couple of weeks comes into play, because what I noticed is we did get that seasonal weakness in the S&P and in the NASDAQ in the second half of February. But I wanted to make 5 quick points. Number one is that we pulled back on lighter and lighter volume. To me, that's a simple sign that the institutions were not rushing to sell their shares. That's number one. Number two is on both the S&P and NASDAQ, we came down to the 200-day, which is a strong area of support. We talked last week how the 200-day was resistance, and nice to, at least for now, see support. That's number two. Number three, seasonality. The second half of February is weak, but March and April tend to be statistically some stronger months. Number four is sentiment, where a lot of the sentiment measures, you even made that point on Spaces. We dropped a couple of days in February and people were calling for the end of the world. So it's nice to see from a contrarian point of view, some of that bullish sentiment come down. And the fifth point is stocks, which leads into option flow, meaning that a lot of stocks have been holding up well, especially growth stocks, showing that the risk on is still there in the market. So my conclusion, it doesn't mean we're going to the moon. I just think that this pullback was healthy and we're heading into a couple of seasonally strong months, and the option flow, the technicals are still pretty solid overall.
Important that you're actually doing this from a daily perspective, because I think a lot of what I notice or that I see is that everybody's on either a 1 minute, a 5 minute chart, and everything is so hyper focused into one thing. And there's not really that step back. So it's such a breath of fresh air to be able to go, hey, look at the daily, and you're not looking at all of the other intraday movements to be able to make that correlation. And you're looking at things that any technical person would be looking at, or anybody that's looking from a technical perspective. And that's something that's kind of interesting, or something I'm kind of a little baffled about, is because a lot of people that I do follow that are more only technical are not seeing some of these bounces off of the 200 or volume. And that's really important. And I think there's a lot of opportunity here. And we just really want to make sure, like, you're looking at things from a calm space. You're looking at things from like a perspective that's, we're moving up on volume, we're pulling back on lower. That's what you're supposed to
It's
do.
important to
So
be
I love
calm
that.
within all this
Mhm.
chaos, right?
Mhm.
Uh,
Exactly.
no, that to me, it doesn't matter what time frame people trade on. Doesn't matter to me, short term, medium, longer term. I just think it's always important to take a step back, maybe look at some daily charts, maybe look at some weekly charts, see where we are in relative to the moving averages, just because it helps reduce some of the noise and can help you, helps for me at least, helps with clarity when analyzing the markets.
Absolutely agree. And it's just most do just go into how can you buy here? You're overextended, and they're looking at a 1 minute chart. And then I go and look up a daily, and I was like, oh, but like this is right off the 200. This is where you should probably buy, and at least you have some really defined risk. And so there's going to be different perspectives based off of your own individual time frame, but at the same time, step it back a bit, calm down, look at an overall picture, and I think you'll be able to have a little bit more clarity.
Yeah, no, I agree with that. So I know you had a couple days vacation, but I feel like you never stop working and you're always paying
Yeah,
attention
yeah.
to flow. What stuck out to you last week? Anything ETF wise, individual stock, just any general comments that stuck out to you?
Yeah, so it's a little bit unusual because there was a little bit more that was short dated, and that's a little harder to kind of navigate, especially because I know some of our audience is going to be more swing term, like longer perspective. But I think it's worth mentioning because of where options will have a pull. And if I could possibly share my screen and
Yeah.
get
So
that
while
up.
you're sharing your screen, shorter dated meaning that expired last week, expired this week. What do you, what it, because there's
You
all sorts
know,
of, as you always
let
remind me, there's different time frames
okay,
with shorter dated.
so this is going to be something we're gonna touch on in and of itself. So cliffhanger, zero DT, this will be a whole separate topic. But interesting that you say that because now we're here, right? It used to just be monthly, weekly, now 0 day. And so when I say short dated, yeah, yeah, like people are scratching and it's short dated. So this is weekly, but you have some size here. And even if we wanted to take a look at 0 day, which we'll do that because I think it'll kind of blow your mind. Um, just the size that comes into a weekly position. And when you look at SPY or Qs or any of the indice ETFs, you don't necessarily see millions going into weeklies. And maybe it's been more of a it's normal now. It wasn't necessarily the same before, but because of 0 day and also just kind of where options are driving some of that volume and driving some of that pull, it's definitely worth bringing up. And so I just kind of wanted to bring a little bit of attention um, to where we had on Feb 28, and this came in the afternoon. The timestamp's not there, but this was about 45
Tuesday
minutes
afternoon.
Tuesday. Yeah,
Okay.
228. You had some larger size into 391. And so if there's any yellow on my screen, that means it is what I refer to as an opening position. What that means is that this line is exceeding open interest. The number of contracts that are coming in with this order is over the existing open interest.
Okay.
So there's a little bit more intent there. So if somebody came in and they only added 100 to something that maybe had 1,500, that's cute, but it's not really something that's going to catch your attention versus somebody that's coming in with X number of contracts, which is way over what current open interest is. And that's when you start to pay attention. So I did want to add that because I think it's important that you're focusing more on newer orders, stuff that is more eye-catching, stuff that's like taking out open interest. That's really, if you're watching options flow, where you kind of want to guide your eye. And on 228, you had some activity come into the 391 puts and 1.5 million, which was just really interesting because we were trading at 398.44 when they came in. And it's an opening position. There's not a lot of time here. We did pull back. So I'm going to try to, oh, sorry. I'm going
That's
to
okay.
pull this chart up just to kind of show, that there was still a move down in after hours after we had that options. So there was still a pull. I don't have it fine tuned to be able to show all the exits, which I can see. I just really wanted to kind of zero in on some of the pull that comes in with some shorter dated options.
Yeah.
And also what I want to say is that most people don't realize that you can trade major ETFs or your sector ETFs 15 minutes after the close. You can't do that with normal equity. You're not going to be able to do that with AMD, Apple, anything else. But if you are looking to trade Qs or SPY, or let's say somebody comes in with some horrid news after hours and you want to be able to kind of join in, you can still trade 15 minutes after hours in the major ETF. So
that's a great point.
SPY.
People don't
Yeah.
realize that it goes till
Yep,
4:15 Eastern, correct? On SPY, Qs, IWM, so forth. Yeah.
And the reason I want to bring that up is because you had a really big decline after hours. I can't even remember what the news, I think my mind was straight into vacay, but you had a very big decline. And I mean, I'm going to be honest, I was in a position and I got into some cheap stuff, got out like for a quick double. I'm like, okay, well, 10 minutes after the close, I'm out. And it just really goes to show where you have more of a pull with some of the stuff that is larger size. It's interesting to really, be able to watch. And I bring that up because the next day we come in and we have the 400 calls with even more size opening position into weeklies this Friday's expiration, $2.5 million. They're picking up 41,000 contracts for 62 cents. I mean, this is I've been there. I YOLO. Well, let me kind of see how I do. There's a YOLO that I do that's like $100 for weeklies, and then there's a YOLO that's 2.5 million. And so it's something you kind of have to at least.
That's a Carl Icahn YOLO.
Yeah. I mean that's one of
He's
those
like,
things.
I'm bored. It's Wednesday. Let's see what happens.
Yeah. And so you just kind of have to, and it didn't work out right away. So I more than anything, what I want to say is this came in here and it completely tanked. That was not the move. And if you were kind of trying to trade same days off of an expiration that was for Friday, that did not come to fruition for you at all. But also important to kind of keep that in the back of your mind that you have shorter dated. Doesn't mean you have to take the same trade or even trade that. It's just at least a little bit of an awareness. And, the rest of the week was the rest of the week, and Friday was an amazing day.
Yeah, we closed
Here.
for a little over 404 on SPY. Maybe that third Tuesday, that weakness was end of the month because it was a higher volume day. There's always end of the quarter, end of the month positioning. So that was maybe an end of the month follow through selling, market on close, something like that. But the trade that you mentioned came in on Wednesday, dropped first, and then ended up in the money on Friday.
Yeah. I mean, it was a bigger, it was a really nice, at least if you were trying to be aware when you come in on Wednesday and you're coming in at end of the day and you've got 2.5 million, you don't have a lot of time for that to work. And do they always work? No, not necessarily, but at least you want to have a little bit of an awareness, because if you're short, you want to have tighter stops. I'm not saying exit your position. I'm not saying that was going to work. What I want to just say is that like you want to at least be aware that there is some larger positioning, because there is so much zero DTE. I mean, and this is spanning across so many headlines, and I can't wait until we could do something specifically on this. So stand by, we will. But you have to at least have some awareness where there's some pull in something shorter dated, even if it doesn't fit your context narrative or what you think the chart will do. If somebody's coming down and laying some wood that's in something that's a weekly and it's 2 days to expiration, you're going to have a reaction.
Yeah. The other thing you mentioned to me is lower price stocks. You've noticed, is it Dark pool activity or options flow in the lower price names that you've noticed?
It's really both. And the reason that I wanted to bring this up was because of being able to join forces with you and attend your um, seminar you did where you were showing everybody how you walk through your process to be able to scan charts. And the takeaway for me personally was that you continue to do this, and then you went from maybe 40 stocks to 60 stocks to 80 to 120. And so through that, you're noticing that there's an increase in names, and I'm doing the same thing. And something that was a little off to me is where we're starting to see more positioning in stocks that are under $10. And it's not
Yeah.
necessarily my own personal style, but I think it's still worth bringing up because I think you have a little bit more risk on. And so, yes, we've seen that in a options. You'll have some names that come through and they're just starting to get call flow and really move, and names that don't normally see that. And I mean, I think that was something you could probably relate to even with AI. But that
Yeah.
was not a name that would have normally been on your radar, but all of a sudden everybody's looking at, and it's a rock star.
Yeah. I think I tweeted that out also. That's interesting. You mentioned when that call flow came in on the night of the 28th. One of my go-to screens recently has been producing 50, 55, 60, somewhere in that range. Then all of a sudden it produced like 85, 90. And sometimes the market can mask weakness beneath the surface, and sometimes it can mask strength beneath the surface. So while everyone's calling for the end of the world, to me, I'm not complacent by any means, but a normal pullback in the markets, and I'm screening and finding a lot of growth stocks. To the point why growth over value is because, to your point, risk on. I'm finding a lot of growth stocks holding up. You combine that with the stuff you're seeing with maybe some lower price names, some flow coming in, it's a decent sign. It's just adding more, as many factors as we can add to our whole weapon, whatever, the whole arsenal of what we're looking at, put as many factors in our favor of possibly some risk on coming into the markets.
And I love that. And after I saw your presentation with your scanning and noticing that was like, that's what we talked about today. Like, I was like, I have to tell you this. It's not something I normally trade. So it's not names that I'm looking at. And I don't think it's something that you're necessarily looking at. It's just in and of itself. Most institutions, mutual funds, cannot invest or put money to work in stocks that are at least under $5,
Yeah.
let alone, $10. Like, let's give a buffer. And all of a sudden, there's just 2 million going to RLX, which is, a China name. ZH is $1.18 and they're 5 million shares Tuesday, 6 million another day. It is just not something that you normally see. And so it kind of, not from a trade perspective, but more from is this risk on? I mean, is there
Yeah.
really
I was
some
going to ask, what's your
positioning?
interpretation of that?
Yeah,
It's potentially risk on, correct?
yeah, yeah, yeah.
Yeah.
And one other side note I would say is, as we've kind of gone through ebbs and flows, and we've had, COVID, we've had Wall Street bets, we've had Kathy, we've had Kramer, we've had all this stuff. Something that's been always interesting me, and most people don't realize, is that before you had Wall Street bets get a chance to kind of have their day, if you actually look back at the tape and if you had some access to some dark pool activity, they didn't. Wall Street ran that and pushed them there. There was already dark pool activity in a lot of the names that were way before that came present. So check yourself. It's not retail is still not running this game. And I think it's interesting because anytime we even start to go into a short squeeze, if you were to go back and look 2 or 3 weeks, and that's the kind of stuff I'm looking at, they're already positioned. So it's interesting that you get news or an upgrade or a whatever, but there's already been a presence there. So
Yeah.
something to think of mine.
Do you mind if I share a couple things that I'm looking at?
Yeah, I'd love it. I'd love it.
Let me go to my screen here. And I wanted to follow up a couple of things just to kind of show some of the feedback, and we appreciate, we got some awesome feedback from the first episode, and some people were saying, as we do this, just be patient with us. We'll be putting in more examples of how we do things. But I discussed AYX. Full disclosure, it's a position I own for clients, and it was right around here where some unusual option activity came in. And I like software just because of the great profit margins and so forth. A lot of software names have been beaten down with interest rates going higher. They beat some of the higher valuation names, but some will eventually start to expand their profit margins, and some profits will start to come in, and some won't. But I'm going to try to pay attention to the ones that show decent improvement technically and unusual options activity. So I took a position somewhere around the low 50s, and it ran up. I had a cushion to hold over earnings, and then I took some profits after they had great earnings. They're supposed to do 50 something cents. They did 84. What's really interesting, and it's a point you've made before on Spaces, is not only do you want to pay attention, great, some unusual option activity came in and it was close to expiration. You've made the point, are they rolling them up and out? Are they rolling those positions from January to March to maybe June or something like that? What's interesting last week is when it had a normal pullback, the green line here is the 21 EMA on my charts. Also on the 28th, you had some August 70 calls bought for $8 and some June 65 puts that were sold to open. So they were writing puts, willing buyers below, that's bullish, and more flow that started in January started to roll out to August. So I'm sticking with this position. And that's where I try to, as I mentioned before, put as many factors as possible in our favor. You have strong earnings and sales fundamentally. You have expanding profit margins. You have strong technicals and that unusual option flow. To your point, it doesn't mean it's going to work. It doesn't mean anything's automatic. There's never anything automatic on Wall Street, but it's just putting as many factors as possible in my favor to try to help my probabilities of success. And it's still a position that I own, and we'll see what happens from here. But I just wanted to explain some of the ways that, we're using unusual option activity, or some people, how they use it.
And I love that, because what most people, if I ever post something or, what does everybody want to see? Unusual options activity. What do you want? It's always the names that are so heavily traded: Tesla, Apple, Microsoft. That is your most liquid names from even a general standpoint from the market when you look at volume, and also from an options perspective. And what most people don't realize is they're looking at weeklies, and they're coming in the morning, jamming it up with a couple $100,000, and they're closing by lunch. That volume never stays and confirms the next day in open interest, because it's so utilized, not only from you and I that could use a little bit of leverage to be able to position into a name that, that's a little tough. You got a smaller account. Let's use some options. Great. But also know that if you're looking for that to be your guiding factor, and the same way that Joe and I are trying to utilize options flow, it's not unusual. It really, I don't think, will ever be a name that we will ever mention or discuss with some of the most liquid, because it's just not unusual. But when you mention AYX, you don't see that. And when you see a continuous roll, it means somebody. So, like, let's just keep it simple. If you got in here, they close and roll, close and roll, close and roll. Just stay with it until they actually get out of the position, because it's just not a name that you're going to see. Not only from a volume standpoint, you don't necessarily have the liquidity that you would have with the Microsoft or Tesla or anything else, but even from an options perspective. So you've got a player that's coming in and continuing to roll up and out. That's somebody great. You just keep going until they actually close and don't want to do it anymore.
Yeah, a couple of quick points. Yeah, with the Teslas, the Apples, some of them spies, cues. You've made the point. Some of it can be noise, should be shorter dated. It can be difficult to interpret. And it doesn't mean don't focus on them. I just would prefer the ones that don't have as much volume, because then when it does come in, it really does stick out as unusual. So I'm going to gravitate a little bit more to small, mid cap, let's say anywhere from 1 to 10 billion, maybe even more. It doesn't mean I won't pay attention to Nvidia and Apple and all that, but that tends to be a little bit harder to decipher in a lot of volume. The second point, and you made this on a space, I think it was months ago, is that there was some stock, I forget which one, a big player was rolling every single month. And then you said they stopped rolling, and you said, look, they've been riding this thing for, I don't know, 6 or 12 months. And then they stopped and closed out that position. And then the stock dropped. So that is also, to your point, that's a great point to pay attention to what, if they are sticking with the trade or not sticking with it, rolling farther out in time.
And that's harder to do. And that's kind of where I have a little bit more of a specialty, because I'm reading the tape. This is what I do. And something I would note is you've had some interest, a lot of interest, further dated with size Microsoft. Even Friday, Microsoft 5.4 million dark pool at 255.29. And the reason that's important is because Microsoft doesn't see that. Microsoft doesn't normally see 1 million plus dark pool.
Really? You think it's just because it's so liquid, they don't need to trade it on the dark pools?
No, they do. I don't want to. So that's a great question. So let me kind of add a little bit more context. They still do, and you see a lot of activity, but for some reason, Microsoft recently is an uptick, more size. And I compare that to Apple, the darling, right? And if we have a 1 million share dark pool print, you're never going to hear me mention that, because it's just not size. Because for Apple, it's not size. If Apple, and I'm going to say something or go like, hey, pay attention here, it has to be at least 5 or 6 million shares, because it is so heavily traded. But Microsoft, you don't really see the 1 million plus. And that kind of brings me into a little bit of what we're seeing options flow wise. There has been positioning in Microsoft. We're going out to May, June, July. We've had it in Meta. We don't have it in Apple. And that's just kind of weird. That's where I'm just kind of like, okay, where are we going to go? I think you kind of need some participation. I don't think you need it, because I love that software is finally getting some attention, and that's been great. But I think at the same time, if we're going to have tech kind of go, considering the weighting, we need to have some participation here. So I don't know, are we kind of like holding down? What are we doing here? But I think if you're going to continue to have some XLK upside, you've got to have Apple. And I will also say, as a side note, let's talk about leverage. TQQQ, very liquid, very active with stocks, and you just haven't seen that yet. And I'm kind of wondering if you'll see some of that, and then we have Apple go, or maybe it's just more focused in SQQQ. We'll see. One thing I will say is that more of the activity, especially from a leverage standpoint, has been in SPY, and more specifically with like UPRO. And so you have UPRO, which is a
Pro is 3 times SPY.
3x.
Okay.
Yeah. So 3x has been seeing some size. And to me, it's interesting because
I love options on 3x.
Yeah. So, I mean, but
Do
this
they
is
come with a
an
needle when
option.
you buy over a certain number of contracts? Do they send you like a needle to shoot in your arm when you? I
But this
just love
is,
it. I don't make fun of it. I just think it's great. Like
yeah.
the
So you want
3x
some
is
crack?
involved
You
as
want some
well.
crack? Like I got some. This isn't even options. This is dark pool activity.
Oh, okay.
1.8 million shares, and that in and of itself is like almost 20% of a 30-day average volume. And why is that important is because it's one single print, one print, usually coming in at the end of the day, that is what is making up your volume bar. And you just have to pay attention when there's 3x, and I don't think a lot of people do. And I love having that in my back pocket as something that's like, I got
That's
you. I see
something
you.
to watch, is
Yeah,
for
I see
sure.
you.
If
Yeah.
they're trading size on the triples, yes, that's something to
Oh,
watch.
and you'll love this, because I know you're XBI, and I'm watching that one too, because it's just been like, there's been so many bio names, and I'm gonna screw it up. I'm gonna pick the one that's gonna kill somebody. So I'd rather stay with something that kind of carries the basket, and I could just handle that. But LABU 3x bio, 672,000 share dark pool. It's like with size, but I will say they haven't been here. I checked historical, and there hasn't even been any activity since 2-3, so a whole month. And when you look at that, it kind of makes sense. And hopefully we start to see a little bit more there, because I'll play it from a perspective that's the basket. I will not try to throw a dart at the individual names. I'm just, it's not
Yeah,
my.
no, I wanted to let me pull up that chart then while we're here, because on XBI you mentioned LABU, which is 3x.
Mhm.
On the 2nd, which was Thursday, somebody sold 6,000 of the April 75 puts to buy 6,000 of the 84.90 call spreads. Bull risk reversal, writing puts to buy a call spread. As always, it doesn't mean it's going to work, but 6,000 is a pretty sizable trade there. So
Yep.
it's
Yep.
interesting on
and
that.
and then to have something that you have leverage around that is, it's like
Adding more,
I'm
sprinkling
in,
more to the recipe.
I'm in, but like I got, like, I'm in. There's going to be a difference there, and it's not something that you usually see, because most of your leverage is not as heavily traded. So it's really, really rare if you're talking about, like I brought up some put writing in nail. And who would think at this point that you would have any activity coming into anything housing because of the noise? Like, nobody's buying houses, nobody's doing anything. Yet you have this sector that's actually
3x the home construction
yeah,
index. Okay.
you've got a few things going on there. So something to consider, something to look at. And also, just personally, what I like to kind of review, to have some, if I see anything in leverage, I'm pulling up that chart. What's going on here?
For
It's
sure.
definitely a focus for me.
I wanted to bring up SGML real quick because it ties into something a point you brought up about investor days. This is one that 2 Fridays ago, before the long President's Day weekend, Bloomberg reports that possibly Tesla's in talks to buy them. And I was not in it, but then 2 Fridays ago, so this was before the long weekend, but then on 2/24, that's when we discussed last week how that big April call spread came in, 40-50 call spread. I took a position in the shares. I think what happened was Tesla's investor day was Wednesday, the 1st after the market, when they didn't announce anything, which Elon Musk isn't going to talk disclosure wise about any deals he's working on anyways. But it dropped right down to support, and then some put writing came in on this one. I'm still in the position, full disclosure. I'm just trying to show how I'm trying to use some of that unusual option activity, because it's not a big position for me, but when it comes down to support and someone's writing puts, that gives me a little bit more conviction or confidence to stick with. And if you want to add in, like, I know that's something you really pay attention to, is investor days, analyst days, shareholder meetings. If you want to add in like some of the things you look at and how you sometimes tie that into when someone might be presenting, if you want to chime in with that.
Absolutely. I think it's going to be like really imperative. There is a Morgan Stanley technology, media, telecom conference this week, and it spans from Monday to maybe Thursday. Like, every name you can possibly think of from a tech, software is going to be there. And I'm geeking out because I kind of love it, because I watch options flow, and
I
sometimes you
love
get
how
some
excited you
momentum
get
stuff.
about a
Yeah,
tech conference.
you get momentum stuff that comes in to where it's like, tell me you know something without telling me you know something. So there's a lot of opportunity here, like from a trader perspective. Of course, if I'm going to be looking at options flow from a long-term perspective, I want that time. I want to see size going out. But also at the same time, when you start to see rapid fire, endless flow come into a weekly on Spotify, that never sees flow. That's not an Apple, that's not a Microsoft. You're going to kind of pay attention. And so this is kind of going to be like a trader's paradise. Oh, that could be like a song, right? Like yeah,
Traded like
we're,
gangster's
yeah.
paradise. Yeah.
There's some
We could
opportunities this week.
substitute trader's paradise. No, I think that's important because this all ties into one of the most important points you made, is that we just really weren't seeing this last year.
Mhm. Absolutely.
And I think part of the reason we're geeking out a little bit or maybe getting excited doesn't mean overly bullish. It just means a little bit more constructive. You combine a little technicals, you combine a little bit. I mean, we pulled back, to me, a normal 2 to 3 week pullback. And I can't believe the sentiment went from we're going to the moon to we're going to zero. That's a whole other conversation. I'm just in shock at how quickly people get negative. But when you add decent technicals, decent stocks, but the stuff we're both looking at with decent flow, sticking, rolling out, still continuing to come in. I think that's the biggest difference, is that you mentioned last year those trades weren't sticking with the trades. Now you're seeing a little subtle character change with that.
Absolutely, absolutely. Last year, you would have some money come in, and is exactly what you would want to see: 5, 6 million put to work for 3 months out, and then they close the whole position the next day, and it's like, what?
We need a sound effect for
What? Yeah,
it. Yeah,
yeah.
like
And
yeah.
and it was so like, y'all aren't supposed to. Y'all aren't supposed to do that. This is the whole reason I follow you. Like, okay, well, I'm out now. Jesus. All right. And it is extremely different. And even for it's just kind of was it for me to even bring up the fact that there's dark pool activity in stocks that are $10 and under. I've
You feel
never,
dirty talking about
yeah,
that
yeah, don't,
a little bit?
I've never done that. And so
It's risk on though. It's risk
I
on.
know, and it's worth saying because I'm sitting here going like, why? We're hey, who am I to judge,
We're
right?
not here to talk about $5 stocks or UPRO or TQ or any, and I don't care. I've traded them before, so it's not like you said, we're not judging. We're here to point out there's activity, there's something brewing there, and it's just something to
It's
pay
different.
attention to. That's
Yeah.
all.
Yeah, it's something that's different that you don't normally see, and I do feel like I have that eye to be able to bring that stuff and have that experience to go, I've looked at this day over day over day over day, and this is different. So I can't argue with that. The market's trying to tell me something, and all I can do is monitor from here on out where that goes. But just interesting, and I thought it was worth sharing with everybody else so that you guys can all find calmness and chaos. There's some things that are happening behind the scenes, and that's what I hope to be able to bring and have some insight just with what I personally look at.
Okay. No, I appreciate that. I think on that note, we can call it a episode. I feel like we could just talk forever about all this stuff, and it just there's so much to discuss. But I think we covered a decent amount, and appreciate everyone's feedback. Please continue to give us feedback. Subscribe to the channel. We appreciate the comments, good or bad. We're always looking for constructive criticism as well, because we're looking to improve. And then hopefully, as you mentioned, maybe some educational
Yes.
content on specifically on unusual option activity.
And one side note, if you wouldn't mind commenting on what you'd probably like to see, that something that we've talked about is maybe outside of the podcast doing very small, specific topics. If that's something you'd like, please let us know, because we don't really know where to start with that, because we've kind of course, already been trading around this information. That insight would be extremely valuable. We'd love to be able to bring that, and I think it would be a great add. Just let us know below.
Okay. Awesome. Thanks. As always, Mel, you're awesome. Thanks for hanging out, and thanks everyone for viewing, and we'll see you next time on Calmness and Chaos.
Appreciate it, Joe. Thank you.